The United States stock market is closed today, Saturday, June 13, 2026, which means regular trading activity for Lucid Group Inc. is paused until Monday morning. At yesterday's final closing bell, on Friday, June 12, 2026, at 4 p.m. Eastern Time, the stock price finished at exactly $5.15 per share. This marked a modest fluctuation during the intraday session, moving within a tight band between a low of $4.98 and a high of $5.35. The final trading volume for the week wrapped up at roughly 12.59 million shares exchanging hands, which tracks slightly below its rolling 30-day average daily volume of 16.46 million shares. While the absolute stock price sitting around $5 gives off the appearance of a quiet, low-stakes electric vehicle company trying to find its footing, the underlying structural reality is anything but calm. If you peel back the surface layer of these single-digit daily stock swings, you find an intense operational tug-of-war that most casual market observers completely miss. A major securities fraud class action lawsuit was officially finalized against the company, with a critical lead plaintiff filing deadline set for July 28, 2026. The legal complaints target the period between February 25, 2026 and April 13, 2026, alleging that senior executives hid severe quality issues from a component supplier that significantly disrupted the rollout and delivery schedule of their highly anticipated luxury sports utility vehicle, the Lucid Gravity. This hidden bottleneck directly caught the market off guard, creating a severe structural gap between what the public was told about their manufacturing prowess and what was actually happening on the factory floor. The standard expectation surrounding the company has always centered on its elite engineering. The common consensus across online investing circles, retail forums, and luxury automotive media is that they make arguably the most efficient electric vehicles on the planet, featuring superior battery architecture and unmatched range capabilities. Many retail market participants utilizing simple self-investing methods on accessible investing sites view the massive capital backing from the Public Investment Fund of Saudi Arabia, which maintains an overwhelming majority ownership position, as a permanent financial safety net that guarantees long-term survival. The broader expectation is that as soon as the luxury consumer market pivots more heavily toward premium battery-powered sports utility vehicles, this premium brand will capture the high-end demographic easily, scaling up its production line in Casa Grande, Arizona, to generate strong automotive gross margins. The cold reality of the situation challenges this optimistic thesis at every turn. Elite engineering means absolutely nothing if a company cannot manage its broader component supply matrix or scale its manufacturing operations without bleeding catastrophic amounts of liquid cash. The recent corporate class action reveals that a single supplier failure could bring their entire vehicle delivery sequence to a sudden halt, completely undermining the corporate narrative of smooth production execution. When you cross-reference this with their latest financial performance indicators, the operational stress becomes stark. During their fiscal first quarter report on May 5, 2026, the company recorded a heavy revenue miss, generating only $282.46 million against Wall Street consensus estimates of $358.51 million. At the exact same time, their quarterly net loss widened substantially, leading to a negative earnings per share reading of -$2.82, deeply missing the consensus expectation of -$2.3. The stark math of their business shows that their cost of goods sold during that 3-month period reached a massive $594.17 million, meaning it effectively cost them twice as much to manufacture their vehicles as they receive from selling them, before even accounting for research and development overhead or administrative expenses. Analyzing the broader trading canvas shows that this deep disconnect between technical capability and corporate execution is causing major waves throughout institutional circles. Experienced managers evaluating individual brokerage accounts are forced to weigh the massive sovereign wealth backing against the ongoing operational cash burn. Looking across the industry, when professional allocators choose a vehicle for clean automotive exposure, they actively compare structural health across competing entities. If you analyze institutional asset trends inside diversified products like a standard Fidelity brokerage account or specific Fidelity ETFs, you notice a highly calculated approach to high-variance electric vehicle names. Professional portfolio builders utilizing premium tools like Schwab Intelligent Portfolios or similar automated intelligent portfolio systems tend to restrict exposure to companies with severe capital consumption profiles. Even within large active platforms like Fidelity Investments, where managers select individual holdings for specialized Fidelity mutual funds or high-growth equity accounts, allocations to micro-tier electric vehicle operations are heavily restricted compared to steady capital return assets like Apple stock or dominant technology compounders like Nvidia stock. The daily trading momentum of the equity reflects this constant pressure. For retail investors utilizing the Robinhood mobile app or monitoring their portfolios via the Robinhood trading platform, the stock has become a highly volatile vehicle driven by retail sentiment, policy changes, and short-term options flow.
Within standard Robinhood investments, the equity often experiences sudden high-volume spikes whenever macro-positive updates surface regarding broader electric vehicle incentives or when the company announces a new software upgrade, such as the recent mid-year deployment of their updated user experience system, introducing hands-free highway driving. However, because the company relies so heavily on secondary equity sales and convertible debt structures to sustain its liquid cash balances, any prolonged downward pressure on the stock price increases the risk of structural dilution for existing shareholders. This structural risk is a core reason why institutional brokers like Interactive Brokers, known for supporting advanced Interactive Brokers trading strategies, show elevated short interest levels on the equity during periods of macroeconomic tightness, as professional traders utilize the Interactive Brokers platform to hedge against clean energy sector corrections. Comment below how many shares of Lucid Group Inc. you currently hold in your portfolio right now. To truly understand how the brand ended up at this critical structural junction, you have to look back at its foundational business model and its historical pivot points. Founded originally under the name Atiova back in 2007 by Bernard Say, Sam Wang, and Xiaoping Lin, the firm did not start out trying to build luxury consumer vehicles. Instead, they focused entirely on developing high-performance battery systems and powertrain technology, eventually becoming the core battery supplier for the international Formula E racing series. This long phase of foundational battery research is exactly why their technical specifications remain so dominant today. When they officially rebranded as an automotive manufacturer in 2016 and brought in veteran engineering leadership, the strategy shifted toward disrupting the premium luxury sedan segment, directly targeting the high-margin territory dominated by legacy premium European brands and established players like Tesla stock. Their initial market entry with the premium sedan model earned widespread critical acclaim, capturing major automotive design awards and establishing a legitimate benchmark for driving range, with premium trims comfortably eclipsing over 400 miles on a single charge. Yet, the transition from engineering a masterpiece prototype to running a profitable mass-scale manufacturing network proved to be an incredibly steep mountain to climb. Unlike capital-efficient online investing options or asset-light business frameworks, automotive manufacturing requires billions of dollars of upfront plant investments. Throughout 2023 and 2024, the company repeatedly adjusted its production guidance downward as it fought through complex global logistics logjams and factory bottlenecks in Arizona. Even though they successfully launched their premium sports utility platform toward the end of 2024 and expanded their operational footprint into international regions like Saudi Arabia, the sheer cost of maintaining their massive facilities has continuously outpaced their localized vehicle delivery volumes, resulting in consecutive multi-billion-dollar annual operating losses. Looking forward into the remainder of 2026 and toward the horizon of 2027, the future trajectory of the company will be decided entirely by how effectively they can close the gap between their engineering expectations and their logistical reality. The strategic roadmap features several massive catalysts, alongside equally massive existential risks. On the opportunity side, the company is aggressively trying to diversify its long-term revenue streams by licensing out its proprietary electric powertrain components to legacy automotive brands, with high-end sports car manufacturer Aston Martin serving as an early validation of this strategy. Furthermore, management has laid out early plans for a smaller, mid-size sports utility platform slated for a later production window, aimed at a sub-$50,000 price point to appeal to a wider middle-class demographic. This mid-tier expansion is designed to move the brand away from being an exclusive ultra-luxury niche player and turn it into a high-volume manufacturing powerhouse that can compete effectively across mainstream consumer segments. However, the execution path to reaching that high-volume future is littered with immediate hurdles. The ongoing securities class action lawsuit regarding the component supplier quality failure highlights just how fragile their supply chain remains as they attempt to ramp up deliveries of their luxury sports utility vehicle. If the company cannot prove to institutional asset managers that its factory lines can operate smoothly without recurring component delays, the stock will likely continue to face heavy resistance from Wall Street analysts. For long-term portfolio builders tracking their positions through detailed online investing ports like SoFi Invest or executing active trades via the SoFi trading platform, the ultimate question is whether the majority shareholder will continue to fund these massive quarterly cash deficits indefinitely. While the sovereign backing provides a level of credit stability that standard independent startups do not possess, it also means that minority retail equity holders have very little say in the overarching strategic direction of the corporate entity. When you synthesize the entire picture, the core story of this automotive equity remains a classic study in structural tension. The market expectation centers on a pristine, award-winning technology stack that possesses the undeniable capability to lead the premium electric transport market. The actual reality is a complex, capital-intensive manufacturing business burdened by severe supplier friction, deep quarterly financial losses, and a looming corporate legal battle that threatens to dampen near-term consumer delivery momentum. For individual investors utilizing self-investing strategies on popular investing sites or managing risk across comprehensive setups like the Interactive Brokers account structure, navigating this stock requires separating the brilliance of the physical product from the stark reality of the corporate income statement. The technology remains elite, But until the operational execution can match that level of refinement, the equity will continue to be a high-stakes battleground where market expectations collide daily with financial reality. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Thank you. Don't forget to like, comment, and share this video to support the channel.